Welcome to Friday's market wrap-up here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist. What an absolutely wild week this has been. The kind of unofficial, official kickoff to earnings on Monday with Alcoa barely hitting the ball over the net and ending up with J.P. Morgan and Wells Fargo kicking off the financial earnings here. Very crazy week, folks, but the bottom line is we're back in Bizzarro Market. Welcome back to the markets being high on the Fed's hopium. I mean, you can literally see when the Fed minutes came out Wednesday afternoon at 2 what the markets did. And the Fed minutes, folks, merely restated the spoken word from weeks ago, right? They just more or less confirmed that the Fed kind of sort of maybe might one day down the road, data dependent, ease off on the throttle, right? Ease off on that $85 billion a month of propping this market up and making it an absolute fake rally. And the markets went higher. So the Fed, in my opinion, has done an absolute horrible job saying, hey, we're going to end our easing, and then having their lieutenants run out to the microphones after the world markets kind of had their temper tantrum and say, whoa, just kidding, we're not going to do that for a while. So now we're back in Bizzarro Market where you have economic data that can be bad and the market go up, right? We saw University of Michigan consumer sentiment, the first miss this year of 2013. That's not a good thing. Obviously, a miss in consumer confidence is a bad thing. UPS reported poor earnings today. Financials and the transports tend to lead us into and out of recessions. And when a FedEx, a UPS, the shippers report slowdowns like this, it's bad for the economy. So again, folks, we're wandering around this horrible economic desert here in the United States. Small businesses, large corporations are bracing for the impact of Obamacare, from restaurants to supermarkets to large companies, just getting rid of full-time employees and putting them on part-time so they have to do health insurance, folks. We are in a hurt locker in this country, but you wouldn't be able to tell it from what's going on by looking at the stock market. So we're going to go higher, folks. We grind higher, and this is a hold-your-nose rally. Don't get me wrong. Even though I know this MacGyver rally is built on paper clips, a straw, and a rubber band, I'm going to trade the hell out of it. Over at Top Gun Options, our primary live trade brief model portfolio is up nearly $12,000 in 1 week, just this week. That's nearly a 30% return in 1 week. So don't get me wrong. This is one of the most hated rallies ever, but it's a hold your nose rally. Don't fight the tape and enjoy the elevator ride up, but be ready for the crash, because the music is going to stop at one point or another, and whether or not you have a chair to sit on when that music stops is going to be critical. So we melt up. Today we're having kind of call it a relief pullback, so to speak, after we had a couple rip your face off rallies this week, but we drift higher. You can't fight $85 billion a month from the Fed, and it's just an embarrassment that this market keeps going higher. It's incredible. Be careful going long into the weekend, though, folks. Even though we're going higher on really nothing, Sunday night at 10 p.m., obviously they're morning over there, but China's releasing GDP, industrial production, retail sales numbers. If those numbers really disappoint, showing a global slowdown, we could see a huge gap down in our markets on Monday. So just be careful going long into the weekend here. But then again, there was a period of time where our markets were reacting to the Shanghai and to the Nikkei over in Japan. We were kind of on the end of Asia's whip, and they were their markets were on the end of our whip around that Fed announcement time. But now that's gone. So even if China's imploding, we might care a little bit, but we actually don't care. All we care about is the Fed and our hopium party that we're enjoying right now. So I'm not going long into the weekend because I know a China miss with all this data could potentially send our markets into a tailspin. And taking a look at the VIX for the past 6 months, you can see clearly that there's one freak out a month that sends this market tumbling and volatility going through the roof. So always be prepared for that. But I got to tell you, it's a crazy market to be trading. See on the VIX here, every month, freak out, freak out, freak out, big Fed freak out, and then now vol's getting back down to its once known resting heart rate of around 13, 14. So I'm getting ready to get bullish on volatility here with a bullish double vertical. Okay, I got to run. Happy hunting. Make sure you hedge. Make sure you keep an eye out for your email box. We're going to be having a big topic on options open house here coming up, and if you're interested, make sure you check your email box and join us for some live trading in the next couple weeks. Okay, have a great weekend. Happy hunting. Make sure you hedge, and I'll see you Monday for our Monday market outlook.